Greetings traders, my name is Timothy Hellberg. I'm a professional trader since 12 years back. Been trading Forex mainly, but also some crypto, some equities, commodities, you name it. I've been working for some well-renowned firms in Northern Europe and also have my own companies in both trading and algo development. But today I'm bringing you a market report in collaboration with IMGFX, the people's broker. So IMGFX, if you haven't heard about them, they are an online broker that allows you to trade over 200 different assets like Forex, crypto, commodities, you name it, everything you need, almost everything they have. If you haven't traded with IMG before, check them out. If you are trading with IMG already, I hope that this market report can bring you some inspiration for the upcoming week on where the markets are heading, and hopefully we can all have a green profitable week together. So before we jump right into it, just want to mention that everything we talk about today, these are just my own reflections. They are here for informational and educational purposes only. This is not a recommendation to buy or sell anything. It's just a quick glance at the markets from a professional trader's point of view that has many years of experience in the market. So today, first of all, we are gonna start with looking at the economic calendar, so the events for next week. Take a quick look at what's up in the markets from a macro perspective, what's important to look at. We have some news that will be interesting. Then we'll do a quick run through last week's calls. We did quite a bit of predictions for different currency pairs. So we're going to run through them and see what worked out, what didn't, why, etc. And then we're also going to take a look at Bitcoin, that has a promising chart. We're going to take a look at gold, where the chart and the fundamentals are sending mixed signals. So there's, a heads up to keep an eye out on that. We're going to talk quickly about the FX market, the concept of being in expansion or contraction, because right now most currency pairs are at a wait and see cross line pretty much. And then we're gonna top this off with just briefly talking about technical analysis, why some work and some don't. So let's jump into the economical calendar for next week. Looking at Monday, the docket is very thin, so everything last we have mentioned in previous market reports now, when docket is very thin, even when we have news on the docket, a lot of focus is on in Russia, Ukraine. Any news there, as I mentioned before, positive news, the market will overreact to the positive side, and negative news, the market will overreact to negative news, anywhere in between, and the market don't care that much. So Monday, nothing really to keep an eye out for in terms of the economical calendar. Tuesday, some out news during the night European time, but mostly these kind of news is just if you are trading the Australian dollar, if you have trades with exposure to the Australian dollar, it's worth keeping an eye out on those. We have PPI later in Tuesday for the United States, and PPI is important. Why? Well, because it's a good inflation reading. Inflation is really starting to become a problem around the world. We came out of the whole COVID pandemic, which is something that was a completely new market event for the market to digest and handle from a central bank point of view, monetary policy, etc. And then we get this Ukraine war that just flips everything once again. So inflation is the huge macro focus outside of geopolitics. PPI is a reading that gives you some hint about that, so that could move the markets if you take a look at that. The SEV, as we used to call it, from Europe, could be interesting because Germany is the largest economy in the Eurozone. So generally speaking, if we scroll back time like 10 years ago, we would always view the SEV release as a high impact news statement. When I was working at an analysis firm where we did market research for Man Group PLC in London, and so I don't really think it's the same importance these days, because back in the days you had the whole Eurozone with Greece and everything being a big problem. So it's not the same thing these days, but it's worth keeping an eye on. It's not the normal orange release as it usually is. So I would keep an eye out on this SEV just to be in the loop with the Eurozone pretty much. Wednesday, we have core retail sales, generally speaking, not a big release. CPI from Canada, generally speaking, a inflation reading, which could be interesting, but I think it's the same case as for the Australian dollar. Keep an eye out on this one if you are trading the Canadian dollar, otherwise don't really bother with it. But then Wednesday, we end off the day with the big one, and it's the FOMC economical projections, it's the FOMC statement, it's the federal funds rates, it's the press conference, and then later in the evening we also have GDP from the New Zealand dollar, and later in the night unemployment from Australia. So these are some intense hours of macro releases. The FOMC is a big one. This can move the market heavily depending on what they project, depending on what they say, what they don't say. They are expected to hike rates. There is room for surprise here. They can hike more, they can hike less. Everything is on the table because, as I said, inflation is becoming a problem, especially in the United States. So the FOMC projections, what you need to keep an eye out on that is that there's something called the dot plot. And the dot plot is basically a diagram with dots with the different members from the FOMC committee, where they are basically putting their take on when rate hikes or lowering of the rate should happen, and any changes in that dot plot gives you a good idea of the future. So that's usually what we keep an eye out for when we trade macros when looking at the statement. So big one, keep an eye out for that. I have personally, if you have taken trades in the Australian dollar against the US dollar on the FOMC, then it's very important that you keep an eye out for the unemployment rate later that night from Australia. I've personally been in situations where I've chosen to trade, for example, out dollar on the FOMC, and I've held those trades only to wake up the next day of having them reversed due to another news release changing the effect of the initial trade. So that's important. Then we have basically the rate decision from the UK, which is once again also important to keep an eye out for. They are expected to hike 0.25, so once again there's room for surprise there, either a larger hike or no hike, or what they say in their statements. So once again, keep an eye out on that. Monetary policy is the biggest key macro factor for movements in the FX market. And that's pretty much it for the economical calendar next week. Decently sized news, so keep an eye out for them. Next up, let's jump into last week's trades. What worked and what didn't. In NCD Swiss, we had a trade on. We were looking for longs in NCD Swiss, and we actually got the first tight one. Had a decent sized entry here as we got rejected several times off the Kaufman adaptive moving average. So that could have been a good trade. You could easily have gotten somewhere, anywhere up to 4, almost 5 times your risk if you timed it perfectly. Generally you don't, of course, but the bullish trend was intact, and we got a decent sized pullback to enter on. These two would have not have triggered, but as we are right now, we are stretched, so there isn't really any decent entries on it at this point in time. Euro dollar, we were looking for shorts. We actually got it, so we were looking at this zone as a resistance area. We got it later in the week. Could have easily taken shorts off this first one, stops against the highs. and a 2 times risk reward could have easily been taken, almost 3 times if you would still hold, but that's one of those that worked out. We haven't really made it all the way down to next level, so we could still see some movement down there. If I was in this trade still, I would have looked to have taken some profits off the table, locked some in, and kept some open for the whole run downwards. If I would not have been in the trade, I would not chase it lower right now. That trade has gone, but it worked out nicely. Next up, we had pound yen, where we were looking for shorts. We didn't really get them. This one never triggered, it didn't get all the way up there. This one triggered later in the week, but you would have gotten stopped out. Although I wouldn't. This was supposed to be a trade-off of this minor resistance here, and when you get it so late in the week with this kind of price action, I guess you could have taken a small trade with a tight stop loss on this pullback here with a more scalping approach, but generally speaking, not any trade setups that really clicked for me to enter on. Lastly, we had AUD-CAD, where we were looking for a pullback to enter on, and we didn't really get it, not at all. Price just, moved upwards. We didn't really pull back well into the moving averages. When we actually started going lower, it was pretty aggressive, so no trade setup for me at all on that one, to be honest. If you did take one of these ones, would be awesome to hear in the comment section from you guys. If you did, let me know why you took it and how it worked out, basically. So if we jump back into Bitcoin and we talk a little bit about where that chart is right now. If we jump up on the daily chart, this whole structure is still intact, so it's looking promising for the longs from the lower ones. If we look at the correlation that I've spoken about before with US tech stocks, that correlation seems to be breaking. Tech stocks are moving lower, Bitcoin is holding the floor as we are standing right now, so we could see an end to this correlation. If so, that would be nice. Because my preferred scenario would be a move for a higher high in the long term here. So from that point of view, not much have changed in Bitcoin. I would still go on the lower time frames, looking for a long trade of the lower supports with any kind of lower time frame trigger that suits your needs, basically. So Bitcoin looking for longs at a bit of a lower price, and hopefully we can get it. Next up, looking at gold. So gold is putting in a sketchy chart. So as I've spoken about before, I like gold from a macro point of view higher. I like the dollar lower, so everything is in line from a macro point of view for gold to go higher. However, on a technical point of view, if you look at this daily chart, what we are having right now is that you're having a shoulder there, and you're having a shoulder here, and you are having a head here. So that is what we call a head and shoulders pattern. However, it's not really symmetrical, but it's giving us some mixed signals on the chart right now. So I would be careful with gold. I would be careful. I would preferably trade it to the upside, so looking for long entries, but I wouldn't hold those trades for too long. I would be quick to bank the profits and move on, basically. So with that said, if we look at the FX market as a whole right now, when you work professionally at trade desks, what we used to talk about was, is the market in a contraction or is it in a expansion? And contraction is basically when the market is moving sideways like this, while a expansion is when there is an increase in value, for example, as we have seen with a trend like this where price is moving well upwards. And basically we're talking about consolidating markets, or we are talking about trending markets. So from that point of view, the market always moves like this. So you have periods of time when the market is moving well and you get a lot of trade signals, and you have situations where the market is moving more sideways and it's harder to find those trade signals. So depending on your strategy. So we are coming out of a expansion period and we're moving into a contraction period. So we are seeing consolidation, we are seeing pullbacks, and from that point of view, you know, it's really a situation right now where we are looking for, you know, triggers and direction and bias in pretty much all currency pairs, and there's not much to do. You just have to sit on your hands and wait for confirmation in the markets of where we are moving next. So is this pullback here, is it a pullback for the upcoming expansion to start beginning again, or is this actually a beginning of a new downtrend? We don't know. It's impossible to know at this point in time. So you have to wait and see and let the market give you some direction. And therefore, we're not doing many trade calls this market report because we don't have the trade calls given us in the markets. So wait for the market to go into an expansion period again. Until then, you can look to trade the range if that's your type of trading. I personally don't like that too much. Or you go very, very low time frame, like 1 minute, 5 minute, and you get completely different chart patterns, but you trade very, very short term. So that brings me to technical analysis. So just going to touch on this very briefly because, of course, technical analysis is a huge topic. But something that I just wanted to mention for you guys is that there's a lot of social media technical analysis where people talk about trend lines. So and you might think that, well, hey, you have a trend line right now on your chart, so why would you bash trend lines? Well, trend lines as a separate entity, they don't work. The market does not give a rat F about a line on the chart. It does not exist anywhere else than what you have drawn, and they are subjective. So what I mean by that is that this chart that I have here, you see, price is not respecting it. Here it's rejecting before, a little bit over, a little bit over. So why do I have that trend line there? Well, it's showing me market structure. And that's the big difference. So all of these courses that you are seeing about how to trade technically, and they show you how to do trend lines and things like that, it's bullshit. There is not a single hedge fund in the world that will be able to pitch investors and get their investments by telling them that their trading strategy is to buy or sell trend lines, whether they are horizontal or if they are vertical or whatever, okay? Because they do not exist. What you use trend lines for highlights market structure. A market structure is highlighting lower highs, for example. And if you have lower highs, but at the same time you have higher lows, well, that's a wedge. Now this wedge does not tell you anything about this trend line here. This trend line, don't care about it. What it tells you is that the price is making lower highs, but it's also making higher lows. So it's indecisive. The market structure is indecisive, and this kind of pattern, when it breaks to the upside or the downside, it usually goes hard. Now, this is of course just an example. So to sum it up, why does some technical analysis work and some don't? Because it's not written in stone. You use it to highlight a market structure, and you look for that structure to be broken. You don't use it as a fixed line in your chart to buy or sell off. Hope that makes sense. If you agree with me, or if you don't, let me know in the comments. Would love to hear that from you guys. Hit the like button, subscribe, you know, all of that fancy YouTube stuff. And I will be back next week with some more information on the markets. I hope you all have a green and profitable week. That's it for me. Thank you guys.